Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of more tension between expected future optimism and present loss of momentum. Firstly, in the US, their services sector activity hit more than a 19-month low in March, as recorded in the widely watched ISM survey. The market services sector survey was out as well, and that recorded a tiny gain, even though their level is below the ISM survey. Private payrolls in America grew less than expected, as recorded in the ADP survey, a precursor to this weekend's non-farm payrolls report for March. This ADP survey actually shows shrinkage in factory jobs and very weak hiring by small business. Another sign of a dragging economy is that heavy truck orders fell to their lowest level since October 2016 and are down a massive 66% from March 2018. Yes, all three of these data releases confirm a loss of momentum that we've reported earlier, but it's not all bad news. Mortgage applications jumped in the past week, and that was said to be sparked by a drop in US home loan interest rates. In fact, it was the biggest one-week drop in a decade, taking the standard US 30-year mortgage rate to 4.06% plus points. But services don't really drive world trade, and the WTO has sharply downgraded its forecast of trade growth in both 2019 to 2.6%, down from the prior estimate of 3.7%, and in 2020 to just 3%. And the IMF has released new research that clearly shows tariffs won't work to solve economic imbalances. And the indications from the China-US trade talks continue to be positive, but still no deal or breakthroughs. In Europe, retail sales came in with much better than expected growth in February, and year-on-year sales are up 2.5%, and that is after inflation. That's real growth. As the sales downturn in Australian residential property bites, analysts claim there is more evidence that the primary cause is a Hayne-induced credit crunch rather than affordability limits. One key reason is that sales are equally lower in affordable neighbourhoods as those deemed unaffordable. And yesterday, Australia reported a record high trade surplus along with surprisingly strong retail trade data. US Treasury 10-year yield is up this morning at 2.52%, but their 210 curve is still at 19 basis points and their negative 1.5 curve is still at 9 basis points. Gold is unchanged, however, at $1,291 an ounce. And US oil prices are also little changed today at just over $62 a barrel, while the Brent benchmark is just on $69 a barrel. And the Kiwi dollar has recovered half a cent since this time yesterday and is back at 67.9 US cents. On the cross rates were marginally lower at 95.4 Aussie cents, and against the euro were slightly higher at 60.4 euro cents. That puts the TWI at 72.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.